Hello everyone, welcome to the weekly wrap. Second week of the new calendar year started with a good bump up at fresh record high, tad below the 14,500 mark on Monday. In the initial hour, we witnessed a small bout of correction, but similar to recent trend, the intraday decline was bought into, and the index thereafter once again resumed its upward trajectory. The similar price movement was continued for following three trading sessions. However, on Friday, there was some sustained profit booking seen to conclude the week tad below the Monday's opening point. The bulls are continuing with their strong hold on the market and barring single day of sharp correction last month, the relentless rally resumed to clock fresh record highs day by day. In our intra-week commentary, we had mentioned how 230 factor played out well since last few days. There was a typical pattern when we see some price decline in the first half and buying emerges in the latter half to hit new record highs. But this winning streak finally got snapped on Friday when market corrected further after 2:30. Although it's just a one-day activity and still no major damage done, we expect 14,650 to act as an immediate resistance now. On the daily chart, Nifty closed below 5-day exponential moving average for the first time in the recent past, which is a first sign of weakness. Hence, in the forthcoming week, the extension of profit booking cannot be ruled out. The moment we see Nifty sliding below 14,380, we expect the Nifty to slide towards 14,250, 14,100 levels. In fact, stock specific, the fatigue was seen in so many counters from Wednesday itself. The major banking index is at its previous record highs, and the Nifty Midcap 50 index, which is at crucial Fibonacci ratios, may provide this much awaited corrective move. Let's see how things pan out in the early part of the coming week. Since the overall trend has been strongly bullish, even if the correction comes, one needs to go one at a time rather than projecting bigger downside targets. Traders are advised to stay light and avoid aggressive leverage positions. Now, as far as the stock ideas is concerned, we have one buy and one short idea. The bullish call would be on Vodafone Idea. Mostly we avoid such low ticket size counters because of their irregular behavior. But the kind of price and volume activity witnessed in this counter last week, it certainly cannot be overlooked. The stock prices broke out convincingly above its multi-month resistance with some authority to mark highest close in last 18 months. If you look at the volume activity, it suggests tremendous buying interest in the stock. Hence, we recommend going long on any dip from current level towards 13, and target in coming weeks would be around 18 to 20 rupees, and the strict stop loss should be maintained at 10.9. The sell call would be on IGL. Overall, if you see all these gas distribution companies have already given extraordinary moves since the mid October. IGL has been one of the marquee PSU names and has managed to clock whopping gains of approx 55% in such a short span to register fresh record highs. However, since last couple of days we have witnessed some profit taking in this counter, and now looking at the daily chart, it appears that the shooting star pattern has been confirmed, and on the weekly chart we can now see a gravestone doji pattern. So in the near term we would expect some kind of extended profit booking in this counter. Hence, one can look to go short on any bounce towards 560, 565 for a target of 527 in coming days. The strict stop loss should be maintained at 576. Thank you.